We've made some very bold claims in the past. Since 2010, to many jeers, we said that the Federal Reserve would never raise rates significantly again. Most laughed. They said that surely this crazy emergency 0% interest rate policy was only temporary. 5 long years passed, and even a Fed chairman later, before finally, after 7 years to the day, on December 16th, Janet Yellen took the bold move to raise rates 0.25%. There you see, said some. But we retorted that we meant the Fed would never significantly raise rates again. 0.25% isn't exactly a massive move. We responded that the Federal Reserve would soon begin backpedaling on future rate hikes. We also had said, since the summer of 2015, that even a 0.25% rate hike could be enough to cause a major collapse in the markets. And since they rose rates 0.25% on December 16th, what has happened? World markets have dropped more than ever in history to start the year, and the Dow Jones has dropped 1,805 points. Today, the Politburo, called the Federal Open Market Committee, cooled as expected from their economic outlook for a further raising of rates. They recanted on their glowing outlook on the economy made just 6 weeks ago, saying, labor market conditions improved further even as economic growth slowed late last year. It's only been 2 weeks since Barack Obama's State of the Union address, where he said anyone saying America's economy is in decline is peddling fiction. And now Janet Yellen said that America's economy declined late last year. Someone's peddling fiction, that's for sure. The next FOMC meeting is on March 16th, and I'm going to make a prediction. Either the markets and the economy will be in such poor shape that they will again put off a rate rise, or if not, and they raise rates, it will set off yet another massive collapse that will have the Fed backpedaling to the point of lowering rates again soon after. The reason they can't raise rates is because the US federal government's debt has grown to such a level that even an interest rate of a few percent will make its insolvency clear. Total US government debt has doubled since 2008, during the crisis caused by too much debt. The markets fell again today after Janet Yellen spoke from her pulpit, another 200 plus points on the New York Stock Exchange. The wheels are quickly coming off this wagon, and as this year progresses, it will become even more brutally clear that we are in a crisis that will be far, far worse than 2008. Since we made our other bold call that this collapse would begin in the fall of 2015, world markets have lost a total of over $17 trillion. The scary part? This is just the beginning. Mark our words. And don't forget to subscribe to TDV to get the best market analysis and recommendations before our rates rise due to demand on February 1st. We've been short the market since last summer with gains in the hundreds and thousands of percent, and long Bitcoin, which has since doubled, and our long gold and silver, which have both begun to rise since the beginning of this year. And or join us at our upcoming TDV Internationalization and Investment Summit on February 18th to hear from top experts on how to survive and profit from this ongoing collapse. This is not the year to be taking your eye off the ball.